Hello, welcome to the London Academy of Trading Market Insights for Friday the 23rd of April. I'm Paddy Osborne, I'm the Dean, and just going to have a little look at what's happened this week in the news and the markets to give you a little rundown on what might be happening next week. So what we've seen today, if you just check the screen that we've got here, we've got the economic calendar from today, and we have had some very positive retail sales from the UK. All of this green data you can see here in this column, everything pretty much is green. So the retail sales from the UK was very good, which has helped to confirm the rebound that we're getting in the economy in the UK. And also we've got these manufacturing PMI, services PMI, etc. So this is the Purchasing Managers Index. So this is giving a sort of a leading indicator of what's happening in industry, both in services and manufacturing across Europe. And these are all also very positive. So that's given a boost to the euro. Just having a quick look at the charts. Let's just go and have a look at some charts here. This is actually the euro for the last month or so. Just this is for the month of April, and we can see here the euro has really been on the front foot. It's done extremely well in the last 3 or 4 weeks, up from 117, well above 120 now, and comfortably holding above 120. So there's a very big level on the charts at the moment, which is the 120 level. I've got the level in here at 119.93, which is this previous high from last week. But the 120 level is just a tiny fraction above. So look what's happened here. This was back here on Wednesday, where we saw the sell-off. This sell-off was caused initially in the beginning of the week by the high numbers of COVID cases in India particularly, and Japan, and that spooked the markets a little bit, and it also spooked the euro, and it went to safe haven dollar. So there's some dollar buying on the back of the safe haven with this COVID numbers increasing in those countries. The euro then regained some footing, but then again got hit back again here. This move down here, which you saw yesterday afternoon, this was on the back of the rather dovish comments from the ECB. So they're basically saying, look, you know, we're not going to be raising interest rates. We're going to continue with our program of quantitative easing. Interestingly, the previous day, Canada had come out, the Central Bank of Canada had come out to say that they're going to reduce their total quantitative easing from 4 billion to 3 billion Canadian dollars, and they're going to start tapering, and they're expected to start raising interest rates in the second half of next year instead of 2023. So they're looking very bullish and positive about the future. I mean, basically what's happened is in stock markets, let's have a quick look at some stock markets. And again, over this last few days, let's just start with the US. We can see there's actually some interesting patterns forming in the stock markets, and this is reflecting quite a similar story to the euro. So we've seen here as the euro's gone down or the dollar's gone up, the stock market's gone down. That's quite a common inverse correlation between the US dollar and the stock markets in America. And we can see here earlier in the week, this was the weakness that we saw on the 20th, which was on the back of the coronavirus, and then this was actually overnight. So different story in this case. This was Biden, President Biden, saying that he's going to tax, he's going to double potentially the sort of the capital gains tax for investors. But this is only for investors who are earning over $1 million. So it's only the very top investors, but of course there are a lot of those, and they have a lot of money, so it's going to affect the price of shares, of course, because the speculators, that's where they make their money, and they don't want to be taxed on it. So the knee-jerk reaction there was quite strong, and we can see there that pulled back. Now, interestingly, on all of these charts, I'll just flick through. This is the Dow Jones, and we can see here we've got this decent level around the 33,700, where it's found some support, and again overnight found some support this morning. We've got the S&P looking very similar indeed, with this 4,121 level again being confirmed several times. So this is a key level now on the chart. If this breaks, then that could open up the door to some more sort of panic selling. You know, markets tend to go up slowly, down quickly, and we can see here the last this is again about a month. The last month has been pretty steadily up without too much no panic buying certainly, but just good accumulation. And then when the market goes down, it tends to drop like a stone. So this is the key level here. Another one on the NASDAQ, very similar. Again, this level here at 13,700 roughly has been tested 2 or 3 times, and again found good support this morning. So we're looking for this to hold. If this doesn't hold, then you want to be closing out long positions and potentially looking for a short for a move further down. Okay, the UK has followed a similar sort of pattern as well. You can see here we've got this support in the FTSE at 68.55. That is 68.55, and this is looking. All of these are looking to form potential, quite significant reversal patterns. This is looking very much like a classic head and shoulders. Here's the shoulder, here's the big head at the top, which is the first time the FTSE has been above 7,000 for over a year. Got a bit of a nosebleed up there, came back down again, and now a small, rather weak recovery. And it's thinking about it. If it breaks through this red line and starts to go lower, then potentially we can see it back into the 6,600s sometime probably next week. So this is something to look out for. On the American markets, we've got a potential double top on the Dow. We've got a potential double top on the S&P, and this could be a slightly wonky head and shoulders as well, or possible double top again on the Nasdaq. But certainly the upward momentum has stopped this week. It has been pretty strong for several weeks, and just this week it started to get a little bit thinking about it. The other thing to bear in mind is looking at the bond markets. So if I just go and have a look at the bond markets here in the US, I've got a chart here of the US 10-year bond yield. Okay, and this is something that a lot of people have been looking at, and basically what's happening is here, this is the yield on the 10-year bond. So the US government, they issue treasury bonds all the way from a month all the way to 30 years, but the 10-year bond is considered sort of benchmark about what the market thinks about the future prospects for interest rates. And you can see here, since this is a slightly longer term chart, since the beginning of January, when we had interest rates on the 10-year bond at about 0.9%, it's gone up pretty steadily up to a high here at the end of March at 1.77%. So this was implying that the bond market was expecting the Fed to start raising rates sooner rather than later. The Fed has since come out and said, yeah, we're not going to do that. We're looking at unemployment. We want to get that down first. We don't mind if inflation goes a little higher than our target of 2%. In fact, the target of 2% is off the table for now. And so the market has now gone, okay, fine, it looks like you're serious. And it's come back down to sort of 155. And that is the reason why the dollar has been relatively weak. The euro has been relatively strong, and the weak dollar is also, is reflecting in the stock market, is also reflecting in the currency market. Okay, the last thing to have a little look at before we go is crypto, which is actually not having a great time. If we got here, I've got a similar chart of Bitcoin for the same sort of period as the equity markets, just the last month or so, and we can see here we've had a couple of pretty horrible pullbacks here from a high of 65,000, of course the all-time high back a couple of weeks ago, and we're now down below 50,000. So it's a really significant pullback. It's looking a little bit unpleasant. This latest move here was on the back of the Biden comments from yesterday afternoon, and so all of a sudden, we had Doge kicking off this week and last week. We've had Ethereum doing well, hitting new highs even yesterday, but they're all off their highs, and all of a sudden, people are getting a little bit nervous. The crypto market is it's got a very large audience now of traders. A lot of them are relatively young in terms of their trading experience, and so there's a little bit of overexcitement and panic, and emotions get a bit high and a bit low. So it's interesting to sort of try and see that on the chart, and here we can see a couple of moments of panic that we've had in the last week. So keep an eye on that one. I think that it'll find a support level at some stage. It may have found it already at 47,500, and Doge looks like it's going back to where it close to where it started. Ethereum is looking quite positive, but we'll have to see about that one. But at the moment, the seller's a little bit in control of the currency of the crypto market. So just keep an eye on that one. But there's still, I think, opportunities for this to go higher and longer term. Depending on what goes on with the crypto world, which is obviously going to develop and become more mainstream. I still think there's the scope for these things in the long term. That's many months up towards the end of the year to go higher. But for the moment, we've just got to be a little bit nervous because the seller's a little bit in control this week. Okay, hopefully that's a nice little rundown of what's happened this week. Good luck to all of you out there trading, and we'll look forward to seeing you again next Friday. Thanks.